Hello there traders, in this video I'm going to show you how to change your trading once more using this candlestick pattern. So let's begin with this video. First of all, you need to understand the engulfing candlestick. This one is a bullish engulfing candlestick. This one is a bearish engulfing candlestick. So the thing that we are going to do here in this video is that we are going to focus not only on the next candle, but on the third candle. Even on this side over here, we are going to focus not on this one, but on this next candlestick. Basically, is that when you see a bullish engulfing candlestick like this, then the next candlestick here will behave in a weird way. Then you will focus on trading this one. And most of the time this candlestick here will become very aggressive to the upside, then this one will be very aggressive to the downside. So let me show you an example. This here, we can see that we have a bullish engulfing candlestick like this. The first candlestick will be a bearish candlestick, this one here. The second one will be the candlestick that forms a bullish engulfing candlestick pattern. Then when you see this one here, it has to close with a bullish candlestick, then you will focus on this low here. Price eventually on this next candlestick here, on the fourth one, price is likely to come and manipulate this low here. Then you'll be looking to enter the market around this areas here. I'll even show you some few examples so that you can understand this pattern clearly, because most people will buy here. Let me clear everything so that I can start. Most people will buy around this candlestick here, and then the market, when it moves to the upside, they'll eventually put their stop loss around here. But then this candlestick will come and then take them out, and then price will shoot aggressively to the upside. Then they will regret their decision. So from here, let me show you an example. This is the lower time frame of the same chart, and most of the time you'll see that price is likely to give you some zones around these areas, and then here is where you'll be looking to enter long. And if you move back to the previous slide, you will eventually see that. Let me show you an example. Over here. If we have a bullish engulfing candlestick like this, let's say this is your bearish candlestick, this is your bullish candlestick, price is likely to come and retest this area here, retest like this, and move to the upside. So what I mean is that when you see like something like let me show you an example around this chart. It's just that we don't have it, but here we have it here. We can see that we have a bullish candlestick. Price is likely to retest here before it can shoot to the upside. I hope you understand it clearly. So from here, guys, this is where you'll be looking to enter long. So let's see how the market behaved. We can clearly see that the market moved to the upside. So let's do another example so that I can show you properly. Here we can see that we have gold on the 4 hours time frame. Then from here we can see the same pattern before the market can shoot to the upside. So you'll be looking to wait for the market to break this low here, and then you'll be looking to enter long here so that the market can move to the upside. So because we have the 4 hours time frame, we can move on to the 15 minutes time frame. So let's move on. We can see that on the 15 minutes time frame here, we can see that we have a structure like this. We have a structure like this before the market can shoot to the upside, and then we can clearly see we have a zone like this here, and also price manipulated this low, and you can also see that we have a correction like this. This is your A, this is your B, this is your C. And also we have a confirmation around here, a confirmation that is a rejection candlestick like this. This is your bearish candlestick, this is your bullish candlestick, and it traded below this low. This is your confirmation candle. And also we can see that we have a confirmation candlestick, and then we have a zone, we have a higher time frame analysis like this, and also we have price manipulated the low manipulation. From here, this is where you have to take your decisions around this area so that the market can move to the upside. So let's see how the market behaved. Can clearly see the market even shoot to the upside very strongly. So every time when you see that pattern, guys, just make sure that you trade it properly, because on this one your entry is here. This is your entry. Then you can put your stop loss below the zone like this, and then you wait for the market to move to the upside. And obviously when the market is moving to the upside, you will have this sometimes, like you can see this is a drop here. Before this can become bullish, the market was shooting very strongly to the downside. So if you decide to close, that means you will miss all of this. So you just have to be patient when you see those kind of setups. So let's move on and find another one. We have another one here on AUDUSD 2 hours time frame. You can clearly see we are waiting for the market to break this low here so that we can trade around this area for the market to shoot to the upside. Most of the time an engulfing candlestick likes to retest, so you just have to be patient. Sometimes it won't even do those kind of moves. You'll eventually miss it. Like for an example, we have this one here. We have a bullish engulfing candlestick here, and then you're waiting for the market to trade below this low here and then shoot to the upside. Even though it came a little bit late, but the market traded below this low. Sometimes you just sometimes you can just use a an alert around this area here. Even for like this one here, we can clearly see that price did not trade. It tried, but it did not. So this low here is very important after an engulfing candlestick, because the market did not retest this low here. I mean this open of this bearish candlestick around this area. The market did not test this low. We have this low here, so your analysis will be something like this, mostly on the fourth candlestick. So this is your analysis on the 2 hours time frame. So let's check out the lower time frame. You can clearly see that we have almost the same pattern, but this move here is telling you a lot of things, because we have an impulse around this area, we have an impulse, and then we have a correction, this move here, but this one is not complete. The market is not likely to reverse in the middle, so that means you still have some shortage in the market. So let's look at this area. This here is a low. Price is at the demand zone, and also you can clearly see that price touched the demand zone. Let's write all the rules. We have one, price touched the demand zone. We also have bullish candlestick here, a bullish candlestick on the demand zone. So that means this is your confirmation. So you just enter the market, put your stop loss here, and then wait for the market to push to the upside. So let's see, the market should aggressively to the upside around this area. So obviously you can enter here or wait for a retracement. You will decide on how you want to enter the market. So let's move on. We have another example here, which is the EURCHF on the 2 hours time frame. You can clearly see the analysis is pretty simple. You just put a line here, because you have the first candle, the second candle, and then we have the third candlestick. So that means we are waiting for the market to trade above here and then shoot to the downside. Even here we can clearly see the same thing, but this one already traded here. This is the second candlestick, but it doesn't behave like this one. You have to understand that clearly, because let's look at it again. We have the first candle, we have the first candle here, we have the second candlestick, we have the second candlestick here, but the third one already retested. On the third one, we don't want a retest like this one here. I mean like this one around this area, because price already manipulated this low. We need something like this here. I hope you understand it. It might be confusing, but they are literally different, because price has already even traded below this low here of this bullish candlestick. This one did not. This one is the correct analysis. Even this one here is the correct analysis. So that means this candlestick should have traded like this before it can drop low. I hope you understand me. Even this one here is the correct one, but price here did not trade here. This one was the correct analysis, even though it didn't play out as expected. From here, let's move on to the lower time frame and see. You can clearly see that we have this high here, have this high here. Let's say you see price doing something like this. This is your highest point. Then you will wait for the market to give you something like a bearish candlestick. So let's see. Okay, we have this one here. This is a rejection candlestick here. So let's say right now you enter the market here, entry, and then you put your stop loss here. So that means you forgot about this high here. I won't say you are wrong about this, but it's still the perfect analysis for the market maybe to shoot to the downside. So from here, entry, so your stop loss here, entry around here. So let's see how things played out. You can see, okay, the market spiked above here. So that means you are stopped out. So from here, you can still enter again, put your stop loss again like this, and wait for the market to play out like this. That's how easy it is. So you have one loss and then one big win. So you just have to wait, even though the market is moving like this. Once you see something like this, don't be scared, because even a correction like this will scare you. Just hold, because you can't get a big win without even holding. I guess, guys, this is the end of our video. Please consider subscribing to the channel, or maybe join our Discord and Telegram. The links will be in the description below. So I guess I'll see you on the next one.